Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was October 23rd, 2009. Another one of those Fridays, guys, that felt kind of like a Monday. Had to kind of get things off to a slow start this morning. We'll show you guys the trades we took a little bit later on this morning. I want to remind you also that we have our 3 a.m. European session right now. 3 a.m. Eastern Time has been suspended due to low volume. Please contact us directly, guys, for more information. We will resume this 3 a.m. trading when volume returns. I want to remind you also that we have a free resource online. Go to our YouTube page. That's / School of Trade. While you're there, guys, please subscribe to our channel and please rate and comment on this video. Now, guys, we took 26 ticks out of the gold market this morning before things started to slow down. $260 out of the market today. That makes our weekly total just over $1,000 this week. After the 4th week, that brings our monthly total to $7,000, just over $7,100 USD. We're going over our 7 deadly mistakes we make as traders, and of course, controlling our emotions are one of the most important parts of our trading methodology. Now, failure to control your emotions, that of course is a big mistake we can make as traders. Let's talk about this real quick. Failure to control your emotions. How can you avoid letting your emotions run wild throughout your trading day? I think the best place to start is with our Discipline Cycle Workshop. Now, Tuesdays and Thursdays in our live trade room, we do free webinars at 11:30 Eastern Time. And about every 2 weeks or so, we end up doing the Discipline Cycle Workshop. Now, of course, this Discipline Cycle Workshop is a full 360-degree evolutionary growth cycle that a trader goes through as they learn to control their emotions. So discipline, patience, confidence, right? All these emotions that go into making up a successful day trader, they're covered in that Discipline Cycle Workshop. Another way to control your emotions is to use mechanical set of rules. Now, it never fails. If you're not using mechanical rules, guys, that means you leave your emotions ready to step in and do the trading for you. You do not want your emotions to do the trade for you. You want to use your rules. So follow your rules, not your gut, right? We always talk about that. If your instincts tell you to go long, your instincts aren't following your rules. And remember, your instincts are not trained to avoid risk. They're not trained to protect capital first. So we can't really trust our gut feelings. We got to follow our rules. Now, of course, we also want to make sure we have trade management rules, right? Very important that even if we do follow our rules to get into a trade, we have to remember that the majority of our profitability comes from managing that trade properly. So if we don't know how to manage the trade properly without emotions, we are probably not going to be able to make much money off of that trade anyways. With your trade management rules, that's going to tell you where to put your stop, where to place your targets, how much risk you're going to be taking, and how to manage the trade as it works out. You want to develop an intimate knowledge of market participants. Now, this, of course, sounds a lot more difficult than it really is. So to control your emotions, right, in order to not get frustrated, right, not to get upset or too excited or too anxious, we want to have a good understanding of why price moves. I think you'll all agree that when we get upset, when we get frustrated, it's because we don't understand why price is moving with us or moving against us. That's usually the most common root of all the frustration with emotions that come with our trading, is not knowing what's going on. Now, of course, if I can develop an intimate knowledge of what's going on, watching for price patterns, using my ticker tape, my time and sales window, my pace of the tape indicator, and of course volume patterns. Using these simple tools, we begin to develop an intimate knowledge of market participants. If you come in every morning with us and look for those price patterns, you read the ticker tape with us, you watch for patterns in the pace of the tape, and you look for volume, right? Going over all of that stuff will help develop that intimate knowledge for you. It takes a little bit of time, but again, guys, nothing good in this life comes easily. So this is going to take a little bit of time coming in every day and developing that intimate knowledge of market participants. And of course, having control of your emotions is essential to long-term profitability. We all know how the story goes, guys. We make all kinds of money in the morning. We get frustrated. We revenge trade. We impulse trade, right? We trade against our rules, and we give it all back. So it's essential that for long-term profitability, right, we control those emotions. If I don't have control over my emotions, I will continue to make money and then give it right back to the market. So use your emotions as a weapon by keeping them controlled, right? Don't trust your gut, trust your rules, develop that intimate knowledge of price action. And as always, guys, we're going to show you how we do this in our trade room Monday through Friday. Now, of course, the European session has been suspended due to low volume, so we're not trading the European session at 2:45 a.m. right now. That will return, though, as soon as we see more volume. The U.S. session, though, is still active. 7:45 a.m. we open up, and of course, we'll show you guys how to control your emotions when you come and join us on Monday morning at 7:45 Eastern Time for the start. Don't forget, Tuesdays and Thursdays, free webinars at 11:30 Eastern Time in the trade room. And as always, guys, check out the beginner's course. That's going to give you all the information you guys need to know about how to trade along with us in our live trade room. Let's talk about some of the trades we took today. Now, of course, we took 2 trades today. Well, we actually took 4, 2 of which were just scratch trades. But here's a good example of kind of what we saw in the market today. Now, this was a market that was at the initial open at 8 o'clock. We didn't see much volume. There was not a lot of activity going on. We had a lot of flat line in price, sideways price action, so we had to wait patiently. And of course, we didn't get our first trade until after the 9:30 open came and went, and then after the 10 o'clock home sales. 10 o'clock home sales this morning, of course, 10 o'clock Eastern Time, that was pretty much the catalyst that kind of jump-started these markets up this morning. After 10:05, we then began to look for patterns. Now, of course, Friday morning, we did expect to see lunchtime settling in a little bit earlier, so we knew after 10 o'clock home sales, we were going to have a small 60-minute window there to take some trades, and this window closed up really quickly on us this morning. Of course, our first trade this morning on the gold at 10:08, this was a breaker pattern short. Fill here was just below that blue line, right, that 63 even. That was my swing low. So as you guys know, we mark up our swing lows here at 63 even. Then we look for some follow through, getting in below that 63 even. Of course, my fill here was 60.8. We got 4 ticks, 8 ticks, and then trailed our stop there to lock in 10 more ticks. Right, 8 plus 8 is 16, plus 10 is 26. There's your 26 ticks we took out of the gold market on our very first trade. Now, to trade gold like this, 4 contracts, all you need is about a $4,000 account to trade the gold market like this. So at 260, right, you're doing more than 5% return on that account in one trade. 26 ticks. Now, a good example, though, is we had a potential for a second breaker pattern here to the short side about 2 seconds after. After this 10:08 gold breaker, we then saw into the swing low. However, though, this time, this breaker short was an HR1. That means a high risk 1. There was one rule that didn't line up. And as you guys know, we define our trades as being HRs, HR1s, 2s, 3s, and 4s. So this one was an HR1, meaning that we have one layer of risk, and that layer of risk was that we were at the previous close and today's open here on the gold. As you can see, it's marked on my charts by that horizontal orange line there. Now we know if price trades back down towards the open, right, there's literally been not enough momentum, either the upside or the downside, to force any real increase or decrease in the price. So when I see, of course, the market come right back to the open, I know we are right back to square one. There is no conviction to the upside, no conviction to the downside, and around the open we avoid the trade. Again, following our rules, kept us out of this losing trade. It would have bounced right up towards our stop, bounced out there, and of course we're happy we missed that trade on that breaker short. So a good example here, guys, of how the same pattern, only a fraction of a second later, will not qualify based upon our surroundings. In this case, it was the previous close of day, right? A very choppy area there around that previous close. And we expect to see that, which is exactly why we avoided that trade. Of course, if you were with us in the room this morning, we called this live. In fact, one of our guests actually called this short this morning, and what a great trade it was. Now, we finished up our morning in the Russell. Really had a small window there, and before long we noticed things were really slowing down quickly here. At 10:46, another breaker short here in the Russell. Now, guys, on the Russell as well as the S&P this morning, what did we see? We saw strong downward trending, but what did we really see, though? We didn't see strong moves. What we saw was exactly what you see here. It was almost like a stair-step pattern, right? Almost like it's walking downstairs, one tick at a time. And basically, when we see this stair-step pattern, that tells us that really there's very little room here to trade with the trend. Okay, and we saw this here on the breaker short on the Russell. 603.8 was the fill. We got out early because, again, we didn't see that strong, forceful move to the downside. It was that trickling effect, right? That stair step all the way down. So in an environment like this where we literally have low volume, but it's clear the trend is down, we have to wait for a reversal and take the two-step long. Great example here, guys, though. Aggressive with your defense, reading your tape. We knew exactly what we were looking for, and we got out early because we didn't see these lows being attacked the way they should have been. You'll know, guys, when you're taking a breaker short at the low of the day, it's got to be forceful. Our rules lined up, but we didn't see that force afterwards. All right, guys, so that, of course, a scratch trade there, nothing in, nothing out. That leaves us, at the end of the day here, 26 ticks on gold, 260 in our pocket, wrapping up over $7,000 here in the room this month. And again, guys, the room opens up at 7:45 Eastern Time on Monday morning. We'll give you live calls with targets and stops, plenty of time to ask questions, and we'll give you free 3 weeks as part of our trial. My name is Joseph James, guys. Thanks for joining me today. Had a great week. Drop us an email, sales@schooloftrade.com for more information about lifetime membership. The room opens up at 7:45 Eastern Time on Monday morning. We'll see you there. Bye-bye for now.